What's up, Wealth Elevator listeners? Now, there are many different asset classes out there that one could invest in. I certainly got lucky and rode a nice wave, single family homes, residential real estate, and then commercial real estate in apartments from 2009 when I bought my first single family home to now. But as I'm understanding, it makes sense to diversify outside of real estate into different asset classes, including I think a lot of you guys out there were like myself, who were in the 401k world, all stuck in equities. Now, today we're going to be talking about the crypto asset class. I know you guys have probably heard of the old tulip story back in, what is the 1600s, long time ago. There was a bunch of tulips were seen as currency back in the day. And then what does tulips do? Nothing, right? So the bubble burst, and some people are saying maybe like Bitcoin or crypto is very similar, right? What utility does it have in a zombie apocalypse? Although some people make the argument that in a zombie apocalypse, perhaps there's even more value to Bitcoin at that point. So today's guest, one of the most respected voices in the Bitcoin space. So Pierre's help us break it down for us and how it compares to hard assets out there. But yeah, welcome, Pierre. Appreciate you coming on.
Hey, thanks for having me on, Lane. Looking forward to the conversation.
Yeah, so maybe tell us a little bit about your background. I understand that you've got a little bit more of a technical background with this. When did you start in the space?
Yeah, I started in the space before Bitcoin existed. I was very much into sound money and precious metals. So this goes back to 2005. So I was a gold and silver bug back then. And then I found out about Bitcoin my last year of grad school. I was getting my master's in accounting at UT Austin. And this was 2012, 2013. It was at the intersection of two topics I found really interesting: sound money, but also open source software. So I was installing Linux on computers at that time and very much interested in the philosophy of free software, free as in freedom. So Bitcoin hit those two notes and I became obsessed with it. Throughout my career, I've been constantly tweeting about Bitcoin on social media and built up quite a reputation. Seen a lot of ups and downs. As you mentioned, there have been speculative manias around Bitcoin. There was one in 2013. There was another one in 2017. And then most recently in 21, 22. Now the year started off strong with an all-time high above 100,000. We've come off those levels a little bit since then, but a decade plus into Bitcoin, I remain very bullish on it. Now, my career has taken a lot of different twists and turns. Worked at BitPay and Bitcoin payment processing, worked at Hudson River Trading, which is a TradFi high frequency trading shop there as an accountant. And also most recently worked at Kraken, which is an exchange as a product manager, and at Riot, which is a Bitcoin mining company. So I was the VP of research there. At Deloitte, I was auditing new transactions of mortgage-backed securities and more esoteric things like student loan debt and credit card debt and cell phone towers. I've always been very interested in the intersection between traditional finance and Bitcoin because of the SEC being pretty hostile towards Bitcoin over the past decade. In 2014, they refused to approve the ETF from the Winklevi twins. But with this election, things have changed dramatically at the SEC. And now I think that there's going to be a much more constructive approach where there's going to be a lot more opportunities for investors to get exposure to Bitcoin in ways that were not available in the past. And that's why I decided to start the Bitcoin Bond Company last month and to start exploring this space.
Yeah, it's not the Bitcoin Wild Wild West as it was in 2014 or even before 2020. Like you said, that initially ETF got rejected, recently got adopted, which is huge, which also means for investors that the 50x, 100x returns that you once thought you were going to get pretty easily may not be here, right? Because the risk has perceptively gone down. But maybe for folks listening, maybe they weren't looking for that type of asymmetric return, but maybe this makes them feel a little bit more comfortable. As I know, I was talking to somebody the other day who was more of a marketing mind, talking about different companies like PayPal's was very much about like security and customer advocacy. If people remember back in the days with eBay, you would send your money off and who knows if your check got cashed. And or your money got stolen. So that was a big part of that brand. And part of Bitcoin is get your damn hands off my money is this idea, decentralization off of the currency, off of countries, which we all know is could be manipulated, especially if you're in some of the other third world countries out there, which is why there's huge adoption of cryptocurrency out there. But I'd like to hear how you come to the same idea. You talk about it as pristine capital. How does, for people used to real estate and hard assets, maybe talk to the case of why Bitcoin fits in that same mindset?
Yeah, absolutely. So if you think about Bitcoin from a technical perspective, it really is a system that's split up into three. You have the wallets that have the private keys that are controlling the Bitcoin. You have the Bitcoin nodes that are establishing the rules of the road. And anybody can run a Bitcoin node. That's what makes it decentralized. Then you have the third part, which is the Bitcoin mining, which is providing the transaction finality, but also the new issuance of Bitcoin. When you look at the code that is the Bitcoin nodes, they have pre-programmed into them a issuance schedule. So over the full life of Bitcoin, let's say by the year 2140, 21 million Bitcoin will have been issued. Already today, 19.4 million Bitcoin have been issued onto the ledger through that mining process. And the nodes are the ones that are keeping the system honest. So if a Bitcoin miner tried to issue more Bitcoin, the nodes reject that block and they say, no, you're not following the rules. And so in a sense, the Bitcoin nodes are like the central bank, right? They are the ones that have the monetary policy programmed into them. And with Bitcoin, you can be your own central bank by running a Bitcoin node and verifying all the transactions. So that level of transparency is really unparalleled from a monetary system perspective. Even if you look at gold, for example, there's no way for you to audit the total above ground supply of gold. Not everybody's going to let you go into Fort Knox and to count up the bars or to assay them. And even if you buy gold online, for example, and you get physical gold delivered to your doorstep, in order to assay that to make sure that the purity is exactly as advertised, with Bitcoin, you can do that for free using a Bitcoin node. And so I think the utility really comes down to the depth of verification you can have on the asset itself. Combined with on the wallet side, you can do that in a lot of different ways. So you can do that with single signature, where you have one hardware wallet that is going to control the Bitcoin. You can decentralize that and split up into, let's say, 5 different hardware wallets, and you have to have some combination of 3 of them to unlock the Bitcoin in different jurisdictions to get some legal asset protection, where any kind of civil or criminal court would have to get international law involved in order to bring together the hardware wallets to seize the Bitcoin. And so there's lots of really interesting cryptographic features that Bitcoin has that your typical hard asset like real estate or gold doesn't have. And so the scarcity aspect of it, I think, is really important, because even if we look at real estate, for example, in some instances, you can get some scarcity, right? For example, Manhattan real estate, you can't add more land to the island of Manhattan. With Bitcoin, there's only going to be 21 million Bitcoin. And even gold doesn't have that guarantee. The supply of gold today is increasing at a percentage rate that is greater than the supply of Bitcoins being increased. And I think that from the scarcity aspect and the utility aspect, and then also the payments part, where Bitcoin settles 24/7, there's no bank holidays, there's no time zones or anything like that, is very attractive in this global digital world that we live in, so that you can teleport Bitcoin anywhere at any time. That is what has contributed to Bitcoin growing from being a $0 asset in 2009 to now the market cap of Bitcoin is greater than $1 trillion in only 16 years. Now, to your point, maybe it's the case that going forward, there's diminishing marginal returns, right? So Bitcoin's not as volatile as it was in the past, and it might not have as high of returns as it has in the past. But I do think that it's going to continue to accrue value for all the fundamental points
Yeah, it's not that it's a good investment, or we're not saying it's a bad investment here, but I think this is what is an investor's philosophy, right? What's your strike zone? If you're looking for something that's very risky, high return, that's might be some of the other altcoins or Bitcoin in the last decade at this point. But if it's something within the strike zone, not a crazy wild pitch that you might swing at, I think it's coming into the zone in that way.
Yeah, I would push back on seeing the altcoins as a way of essentially trying to outperform Bitcoin. For example, we've seen that over the past 5 years, Ethereum, which was the number two altcoin, has massively underperformed Bitcoin. And so it's down 60% versus Bitcoin. It's really challenging right now to find ways to outperform Bitcoin. I think what makes a lot of sense is intelligent leverage. So there's what could be characterized as unintelligent leverage or very aggressive leverage, where you can get liquidated due to Bitcoin's volatility. But if you have a more subdued approach to leverage, you can actually outperform Bitcoin using that. And that's on one end of the barbell. On the other end, for investors who are looking for Bitcoin exposure without taking on the full risk return of spot Bitcoin, lending against Bitcoin, that is providing the leverage to those who are more speculative, can actually offer some interesting risk return profiles.
So in a way, use it like an ETF or a fund then?
There are spot Bitcoin ETFs that exist today. In the traditional real estate market, you'll have securitization products that tranche up the risk of the underlying collateral. With Bitcoin securitization, the concept is that the collateral is Bitcoin itself, and that if we tranche up the risk to say, okay, we're going to have the most aggressive investors who are going to take on the risk of first loss, but also have more upside, versus the more senior bondholders that are more principal protected, but also have a capped upside. And so that allows a tranching of the risk that appeals to different investor segments and ultimately opens up Bitcoin to different risk appetites that historically have not had a great set of products to have exposure to.
Yeah. So something you said earlier, you talked about Ethereum. Now, maybe like the last 5 years, this world's moved so quickly, right? Traditionally, people have had the idea of maybe buying a couple Bitcoin to every Ethereum, right? Because me, if I'm getting it wrong, but the layman mindset was that Bitcoin was your blue chip stock in this world. And then your Ethereum was also a blue chip, but there was a little bit more of a tech component with it as opposed to being the widely adopted cryptocurrency standout like Bitcoin is. What happened to Ethereum?
Yeah, so I think that on the technology side, even if Ethereum has utility, the challenge is that it offers that utility to non-native tokens equally to the native token. For example, you can have wrapped Bitcoin or stable coins like tethers that are using the smart contracts on Ethereum, but that doesn't mean that anybody actually needs to hold the asset. They can hold other assets on the Ethereum blockchain, which really complicates the value accrual question of why hold E, right? So I think ultimately that's the same question for any kind of blockchain that is offering utility: is what is the mechanism by which people are incentivized to hold the native asset versus holding foreign assets on your blockchain? So that ultimately is where I think it falls apart. Bitcoin as digital gold can exist on other ledgers, whether they're TradFi ledgers like securitization or DeFi ledgers like Ethereum or Solana, and that by virtue of having greater liquidity, greater history, and greater scarcity, that ultimately Bitcoin emerges as the winner in any context.
Yeah, and there's other up and comers that are competing on the technology front too, where Bitcoin is your household name at this point. Is the investment thesis, is my understanding.
Yeah, the brand recognition of Bitcoin now is greater than 95%. I think that the understanding of how Bitcoin works and how the decentralization minimizes uncertainty translates into a very attractive form of capital. I think that understanding is still very nascent. And so if we look at Bitcoin adoption, not from a brand recognition perspective, but from a balance sheet allocation perspective, we're still at less than 1% globally. That's why I think that Bitcoin still has substantial upside ahead of it as people's education on Bitcoin increases and their allocation increases, Bitcoin's price will increase.
I'd like to dig a little bit more into the bond idea that you've got, but so we solidify this kind of idea of non-hard assets. I'm sure a lot of people follow the Peter Schiffs of the world, maybe 5, 10 years ago. He was really big on you want to buy gold. He also owned a gold company. So follow the money, people. That's what people are going to talk about, right? That and zombie apocalypses. What's your thought on his line of thinking and maybe where it obviously goes wrong, in your opinion?
Yeah, I think that the challenge with gold itself is the cost of transportation, the cost of storage, the fact that storage is centralized. And so if we look at the history of gold, ultimately the safest way to store your gold is at Fort Knox and surrounding it with the US military. And contrast that with Bitcoin, where you can decentralize custody, where the cost of transportation is very low. And then, of course, on the scarcity side. Now, in terms of what are the scenarios that we're looking for, I'm not on the view that Bitcoin is a hedge against chaos and that we're going to some kind of breakdown in order in society. And that's what's going to increase the value of Bitcoin. I have the opposite view, actually. I think that if that were to happen, Bitcoin's value would decrease. And so when there's turmoil in the markets, Bitcoin's value decreases.
Zombie apocalypse side of the equation.
Yeah, so I see Bitcoin. It's not like the Titanic of fiat is sinking and we've hit an iceberg and that you have to get into the life raft of Bitcoin. I see it as more of, do you want to go ride the Titanic or do you want to upgrade to a modern cruise ship that has much better amenities, much bigger size, and is not going to sink, right? I think that Bitcoin's value accrual story is really about education and people understanding why its features are better rather than it being a system of last resort where people have to use Bitcoin because everything else has collapsed. I think that would be a really negative outcome for everyone. And so that's where I see the Bitcoin bond company as really being a bridge of saying, hey, look, like we're going to this Bitcoin world. You need a vehicle to on that journey that is actually risk mitigated versus just going spot Bitcoin. Everybody who wants to accept Bitcoin's spot volatility and risk return profile already has great vehicles for that, whether it's an ETF or Coinbase and withdrawing to cold storage and putting it onto their hardware wallet and running their own Bitcoin node. All of that's already available for them today. But for all the investors who have been standing on the sidelines because they've looked at Bitcoin's price and have felt that it's too volatile, they haven't had great vehicles for that.
Is it similar to some people, they want to own gold, but they don't necessarily want to have the coins or the bullion, right? For the security, somebody robbing their house. But they'll buy, there's a few ways that people can buy gold through gold mining stocks as a sort of derivative, or actually buy maybe something in similar. Is that kind of similar to how people would hold the Bitcoin?
Yeah, and we have to break up the risk matrix. So on the custody part, I think that there's really great custody solutions for Bitcoin for people who don't want to hold the Bitcoin at their home. And so I'd point them to solutions like Unchained, where you have collaborative custody, where they hold one key, another party holds another key, and then you can hold a key in your bank safe deposit box, for example.
Does that cost like these days to do something like that? Because I think that's what been always
Yeah.
my hang up is
Yeah.
I'm not good at passwords and I just feel like this little gum stick wallet in my pocket just makes me feel really uncomfortable and it goes over 5 figures.
Yeah, I think that you're in the thousands of dollars in terms of fees for setting that up correctly. I think that for most investors today, if they don't want to hold the Bitcoin themselves, they should use a Bitcoin ETF. BlackRock has one, Fidelity has one, VanEck. That's, I think, the right product for them. What I'm really going for is the price risk of the risk return of spot Bitcoin. Whether you're holding it at home or you're holding it in an ETF, that can feel too volatile for a large segment of the population. Or on the other end, that it is not risky enough and they're trying to outperform Bitcoin. And so that's really where, to your point about the gold miners, Some people see that as a leverage long play on gold, right? That if the price of gold goes up, the gold miners will go up more. And so they've benefited from that, with the caveat that you're taking on lots of other risks. The management risk, are the geological risk of, are they going to find the gold deposits? The operational risks, is there going to be an accident at the mining facility that's going to put them out of commission? There's all these other risks where, from a Bitcoin perspective, what I want to isolate is purely the price risk. Where do you think Bitcoin's price is going to be in 5 years, in 10 years? Do you think that it's going to be above a particular strike or below? And so that way we're providing a vehicle that helps investors hold for the long term and meets their expectations.
So you say it's like a leverage play in a way.
It is a leverage play. So for those who are more on the equity tranche side of the securitization, they're going leverage long Bitcoin. For those who are more on the bond side of being the lender, they're going and they're taking the Bitcoin as collateral, but they're capping their upside to make sure that they're over collateralized on the downside in case Bitcoin goes sideways for 5 years.
Yeah, and in a way, they're in a staking position.
That's right. Dollar denominated, right? That their baseline expectation is that Bitcoin is going to continue to exist, but it's not going to, they're not doing the moon math that the equity side is doing of, oh, Bitcoin's really going to outperform.
Yeah, I would say that it's similar to like in the real estate world, right? People could be all fans of real estate, but you have two sides of the equation, the debt side and the equity side. And when
That's
times
exactly
are
right.
good, the equity side or common investors, the LPs on that side, get crazy returns. But in difficult times, even in times where things go down by 10, 20%, it's that common equity side that the money drains out really quickly. Some people on the debt side in real estate, preferred equity these days deserving maybe 10 to 15%. Some people think that's high. It's relatively low in comparison to what the common equity could get. But the same logic here, right? Depending on side of the debt or equity side that you want to be on.
That's exactly right. Developing a capital structure around the asset, and then the performance of the asset is going to determine what the returns and risks end up being realized for the capital structure on the other side.
Yeah, I remember I've had this question a lot in 2019 to 2021, where investors be like, why does anybody want to do the debt side? Then it was lower because interest rates were a lot lower. Why did anybody want 8, 10% when you could be on the common equity sides? When times are difficult, you get burned on that common equity side when it's nice to be the debt holder. But it's for different things too, right? The debt side, or in your case, the bond side is more income focused.
Yeah, in the context of Bitcoin, because Bitcoin doesn't have any cash flows, the interest essentially has to accrue if we don't want to sell any Bitcoin during the life of the vehicle. And so then after, let's say, 5 or 10 years, that in a refinancing or in a liquidation of the Bitcoin, that the interest gets realized and paid in cash. So I think that it's less of an income play and more of a defensive play of saying, I'm not as aggressive on Bitcoin's growth. I don't like the volatility of the equity or of spot Bitcoin. And I want to be able to have the over collateralization where the equity is taking the first loss just in case, and that I'll be happy with the return I get after the term of the loan. And that's why I'm going on the debt side.
Yeah, I think I'm getting it here. And we just to repeat for people who are still trying to understand. In a way, when you go on and you buy your any asset or your Bitcoin or real estate, you've essentially, when you buy it yourself, you're on the debt and the equity side in a way. In what I think what's going on here is you're sparsing out the equity side, which is the more aggressive, higher risk, higher return side, and then the debt side in the form of like a structured like a bond on the debt side. And you pick for what you want, right? Like we said, everybody's got a different little investment philosophy, and everybody should be allocating their assets accordingly. Apparently, we're not certified financial planners, so we can't get involved into talking about the old pie chart of how you're breaking up your portfolio, which is to me a little crazy that only certified financial planners can do that. Stocks, right? Their stuff. But I think a lot of these are the conversations that happen when you get around a community of other like-minded investors. You can talk like, what are people doing with trying to get some high risk, high return things with maybe 1% of their portfolio or 10%. Some of the younger people, maybe even that's 30%. I know my claim to fame is my 20s when I was growing my net worth. It was majority of the stuff was in on the equity side of real estate. Real estate traditionally a little bit more conservative, but it was on the equity side for sure. I think what's cool about this is you're able to pick which side of the equation. You may be somebody who thinks that Bitcoin is going to be around a long time and you like the technology, but you just don't like the volatility of it. And I think that's where maybe this product is for that particular profile. Where some people are like, I like Bitcoin. I want to ride it to the moon. I want to feel the ups and downs. That's you. You're probably a fun guy to hang out with. And that's where maybe the true ownership of it is maybe the right way for you. That it can capture that the different personas there, right? Sure.
Yeah, that's exactly right. And what I want to go for is really the institutional audience, because the institutions today have seen Bitcoin grow to becoming a $1 trillion asset class, and they've seen it really benefit us retail investors, right? And now they want to see, okay, how does this fit into a credit portfolio? How does this fit into a hedge fund? And so even within the institutional world, there's different portfolio managers that have different mandates and different risk return profiles that they're looking for to add to their portfolio. And so being able to crunch up Bitcoin's price risk for them unlocks a tremendous amount of value for all the parties involved.
Another concern that people have is inflation for
Yeah.
investors. I think we're generally in a pro-inflation market. And as I mentioned earlier, when interest rates probably aren't going to be going under 3.5%, talking about the Fed rate, which then feeds into the 10-year treasury, of course. If you look at the Chantal financial curve, the interest rates aren't going to be going down to what it was this last decade, maybe even in my lifetime, who knows? And thus people need to plan that and really have the understanding as I did that real estate really relies on good interest rates to make the deals work. And therefore, maybe with real estate, you've lost a big trade wind to your back. Certainly, a young guy can't buy a little single family home and cash flow on that thing anymore. The expenses are just too high for that to make sense to be in the green every month. And that's what it's require deal makers like us to do, is to go to more audacious business plans and take on more value add play, or even get out of real estate in general and buy businesses. But I think that this fundamental change is maybe displacing some people's real estate holdings and maybe going to different asset classes like this. So that's where I'm like, I think a lot of people come to this world thinking that real estate is something that is held by large wealthy families, but just consider the thinking that what got us here isn't going to get us to where we need to be. And we live in a changing world. But I'm still a real estate fan. We'll still do real estate stuff, but it's just something to think about. And maybe this brings in the world of the Bitcoin. But yeah, talk to us a little bit about inflation. How does it, if people are concerned about that, how does it play in?
Yeah, so I think historically people have characterized Bitcoin as an inflation hedge. I don't think the price action has really reflected that. For example, with the COVID inflation, we did see Bitcoin went from $3,500 on March 12th, 2020, all the way to $70,000 2 years later. That far outpaced inflation. And then when inflation did pick up and they delayed, right? They were saying it was transitory, and then they raised interest rates. The raising of interest rates has been a huge headwind for Bitcoin. If you look at the realized returns for Bitcoin, they have been severely dampened ever since they did that interest rate hiking cycle. So in a sense, inflation, yes, can be a tailwind for Bitcoin, but if inflation causes interest rates to rise, then it quickly flips into being a headwind. Where are we in the cycle today? I would argue that the Fed should continue to keep interest rates high. I don't think they should cut. I know that might be unpopular, but I'm just looking at the inflation numbers and they're still elevated. I think that there's still room for further disinflation before really doing a rate cut. Now, I understand that there's also the fiscal side of policy, which can intervene on that. Bitcoin, it marches to its own drumbeat, meaning that Bitcoin adoption historically has happened in waves, and those waves have been triggered by these halving events. The Bitcoin halving is when the new issuance gets cut in half. So it went from 50 Bitcoin every 10 minutes to 25 Bitcoin every 10 minutes to 12 and a half to 6.25 and most recently to 3.125 Bitcoin. Yeah. Yeah. So the new issuance of Bitcoin happening through the mining. So the most recent cut happened last year and it happens every 4 years. Those historically have triggered a bull market. Now, whether that will continue to be true going forward is an open question because if you think about it, the total supply versus this flow, it has become a smaller and smaller percentage. Now, what we could see today is that this halving cycle has not behaved like the previous ones. We got a small ramp up relative to past bull markets. Now, nevertheless, from our perspective, that's from $60,000 to, let's say, $110,000 was that ramp up. But was it really caused by the halving or was it caused by President Trump's election? I would argue more the latter and the change in regulatory policy. So I think the halving is less relevant to driving Bitcoin adoption. And now Bitcoin adoption is really going to be driven by education and by macroeconomics of what is the Fed doing with interest rates and what is happening with inflation. So we'll see. I think that there's a lot of pressure right now on the Fed to cut interest rates, and maybe they will succumb to that pressure. And that could be a huge driver for Bitcoin over the next couple of years. Or there's other unforeseen events that cause demand for Bitcoin that kind of have what I call reflexivity. That is that as Bitcoin's price goes up, that attracts investor attention. And then it further drives Bitcoin's price growth. We'll see if that happens.
So these having events, for example, is there a place to schedule on this stuff? Or if not, where do you find the information for this? On X or something like that?
Yeah. So you can follow me on X at Bitcoin Pierre. I will certainly tweet it every halving, but it happens every 210,000 blocks. So if you multiply 210,000 blocks by 10 minutes, that's approximately 4 years. So that's what's programmed into the issuance schedule in every Bitcoin node. And that's what triggers the halvings. Now, they get proportionately smaller and smaller over time. So we'll see if that actually translates into Bitcoin price action or if it's really about now Bitcoin kind of sailing on its own.
Yeah, I'm a novice in this world myself too, but I think the thing I would say for folks is I think we'll end with the question on any books or resources or thought leaders to recommend, Pierre. But I think when you're new, you don't know what you don't know. So people will come into our world, they'll do our syndication e-course, do the masterclass, which you guys can access at thewealthelevator.com/master. And then for a limited time, we've got you guys access to the syndication e-course, like 10 to 15 hours of learning about apartment deals through LP's eyes. You're just picking up random stuff along the way for a while. And that's just how it is in the first stage of learning when you don't know what you don't know. And then I think after a while, just naturally you flow into this, all right, what you don't know. And that's when I think you get really traction and things start to build on top of each other, where in the beginning, it can feel like it's just clumps of random information here or there. But yeah, I guess, Pierre, like maybe give us a few resources for people, some books to help them get more comfortable in this world.
Yeah, the first book I'd recommend is The Bitcoin Standard by Saifedean Ammous. And so that's a great way to understand how Bitcoin fits in as a monetary system from an economics perspective. I think the biggest Bitcoin bull today is Mr. Michael Saylor. He's the CEO of Strategy, publicly traded company that has been aggressively accumulating Bitcoin. Follow him at Saylor on X and follow me at Bitcoin Pierre on X as well. I very frequently post there and retweet interesting content. And then in terms of getting exposure, I think that I would start with going on river.com, and they are a Bitcoin brokerage. Even if you're not going to buy a lot of Bitcoin, just go on there and buy, let's say, $100 worth of Bitcoin and set up a Bitcoin wallet and send your first Bitcoin transaction and just see how the system works. You don't have to put your life savings into Bitcoin. You can just experience it firsthand. and start learning from there. If you're really interested in accumulating Bitcoin, that's where you've got to really think through how you want to go about doing that, whether it's through a Bitcoin ETF or using your own private keys and really fully benefiting from the value proposition of Bitcoin, which is to control your own money.
To wrap things up here, any other commonly misunderstood concept about Bitcoin that you want to get the last word in? If you want to mention any way to get in touch with you.
My XDMs are open. You can also find me on LinkedIn. I think that the biggest misconception for Bitcoin is really this idea that it can be replaced technologically by something superior. And this is something that I've been researching for more than a decade now. And every kind of new system that comes along proclaiming itself to be technologically superior, whenever I start scratching under the surface from a software engineering perspective, it always turns out that it's somehow inferior or is taking trade-offs that are adding more tech risk. Then I really caution people against having that mindset of there's going to be a better Bitcoin, because Bitcoin's actually excellent technology that has withstood the test of time here 16 years later.
All right, a little bit of a debrief here for you folks. Again, we bring sometimes guests onto the platform here, but by no means are we giving them any type of endorsement. Always do your own due diligence. I'm not getting any kickbacks nor investing with this individual. So I think what's good is just you learn, right? I think this crypto world, you have a lot of individual influencers, and I'm not a big fan of X, but a lot of them are on that platform, right? Because it is more of a tech-centric community. I don't really know too much about his fund in the investment world. There's like a gazillion of these individual private funds. And the way they work is there's usually like a fee or a carried interest fee, where I think what's interesting about these stock or crypto funds, at least I'm just jaded, right? Because when you operate real estate, there is a lot of physical things that you need to do, right? You actually need to physically manage a physical asset with tenants and toilets and termites. Investment funds like these, there is really none. So does it really warrant an assets under management fee? I don't know. And essentially, the fund is just riding the price of the damn Bitcoin or the asset. Do you really need an actively managed fund, or is it fine to just buy it on your own if you want that exposure to this stuff? I do think it is interesting that you are able to split out the bond debt side versus the equity and the upside. And depending on what kind of investor you are, what you're looking for, you are able to pick and choose. I remember a lot of you guys were like sharing that Bitcoin mining machine deal, which I was like, guys, don't even touch this with a 10-foot pole. I think it turned out to be a sham. And one key thing to learn as an investor is sometimes when you're looking at a deal and the projections and the pro forma, you always got to dig into what are the assumptions on that return. This is what we teach in the syndication e-course, right? You have to really parse out like a lot of the big drivers for those numbers in multifamily real estate. To just use that as an example, is what are they assuming the reversion cap rate is? If they use a more conservative reversion cap rate, that may bring the total returns down in half for all we know. So you got to normalize it. And in this world and oil and gas, you have to really look at what do they think the price action of the underlying asset that's going to be. It sounds obvious, but how many investors just look at stupid PDFs of deals and they just take it as the gospel of that's what's going to happen. So getting outside of the world of Bitcoin and crypto, you have these oil and gas deals and they may assume that the price of oil goes up 5-6%, which is, I'm not a huge expert on these commodities, but sounds a little aggressive to me. Maybe I'd like something that paces a little bit more with inflation at 2 to 3%. But something that you as an investor needs to understand what the normalities of these types of deals are and take that into account. And I think what you'll see in some of these like janky Bitcoin mining machine deals is they'll assume that Bitcoin will be going up 10% every single year like it has in its history. That's just an audacious number, I think. And maybe you need to normalize that number and kind of reassume what the projections are at that point. With real estate, typically you're assuming that the rents are going up with the pace of inflation. Somewhere between 2 to 3% is that number. Just something to be on the lookout for these other types of investments outside of this world. But yeah, hope you guys enjoyed the show. I know I am one to constantly change my own investing. I don't really have any crypto in my portfolio, but I do see the need to expand into different asset classes, right? We saw commercial real estate come down 20 to 30% off the highs of several years ago. Bigger correction since 2008 in commercial real estate, actually harder fall than 2008. Now's the time to be into these types of assets as opposed to the frothy times like 2021. Of course, that's all in hindsight. Same thing applies with private equity and crypto. Things are down off of the recent highs of a couple of years ago, 2, 3 years ago. So now's the time to do it. But this mindset goes opposite of what everybody typically does, right? The average investor out there, when things go down, they'll sell. When things go up, they'll buy into, right? They look around the Las Vegas casino floor. They look for the most funnest, exciting craps table and they'll go there. And then we all know what happens. The seven comes out. But it takes a contrarian investor to look at the underlying value of something. And when there is fear because there is a recent pain, and that's when the sophisticated investor goes in. That's what the institutions do, right? You look what the big Blackstone guys do. I am starting to work on my next book in production right now. But let us know what you guys want to hear on the podcast. I think what's cool about having this podcast now since 2016 is I'm able to open up doors and navigate these types of conversations. Hopefully I channel the right questions that you guys want to hear.